very common question from investors: how do we react to news flow? Last night, Chair Powell announced a 75 basis point increase in the US Fed fund rate. Not unexpected, has been well telegraphed, but I think the detail behind the rise is much more important. Powell did say that the Fed will be moving from meeting to meeting. They'll be more data-driven, and in effect saying, don't rely on my forward guidance. Now, there are a number of central banks around the world, the ECB, the Bank of Japan, and our very own RBA. The comments from Powell last night regarding forward guidance echo exactly the same sentiments as Christine Lagarde for the ECB. Don't rely on the forward guidance. In this kind of world, I think when we look at the Australian assets, we would have to think very clearly about the background in the Reserve Bank, what the global economy is doing, but the overarching central bank is the RBA, and what they say will very much influence the price of money.
Absolutely. While the Fed provides the background music to the global economy, yes, what matters for us in Australia is the RBA.
Yes.
In the past, the rate cycle between the RBA and the US Fed have been quite different. Mm. We can see that on this chart, which shows target rates over the past few years. And we see that US and Australian rates have differed significantly. Mm. One reason for this difference is in the economies which are structured differently. One example being the housing market.
Yes.
We have a chart here which shows home prices in the US versus Australia. The US experienced a boom in property prices over the past year, and even in recent months, property prices have been on the rise. In Australia, on the other hand, as we've read in the news, property prices have come down in the past few months, and we've seen a decline in property prices over the past quarter and also the past month.
Yeah, I think those points are well made in the data. The Australian economy is structurally different to the US in many ways. The housing market and the financial system interact with one another very differently. It is path independent, as the charts and data shows. I would suggest that even though they're structurally different, we may well end up in exactly the same place, where both the US, maybe the world, including Australia, will end up in the world where there is higher inflation and stickier, higher interest rates and greater volatility in markets.
I would agree. Higher rates result in higher debt payments. We will likely see deleveraging, and we might experience credit stress. Mm. We expect lower risk-adjusted returns. What does that mean for our investment strategy?
Well, Gaudy, I think our methodology is well founded on academic research. We've always had a very strong focus on risk management. The method uses a lot of data to identify trends. It seeks diversification in the portfolios and the identification of quality assets. I believe that when we run the screens today, some of the trends that come up are very much related to ESG. They're not unlike the conversations that we would have with investors as well. Most frequently in discussions and in product development, I believe we're seeing things like decarbonization, energy transition.
Absolutely. And while research shows we cannot time the market, we stay invested and diversify intelligently across asset classes.
Yeah. Indeed. The only things that underline there is we should still sharpen our focus on quality, selection, and trends.